Awesome. All right. Thank you everyone for joining us this morning. In this session, we have the privilege of learning from Rayn the Signal Ong, who has been praised by dozens of founders as one of the best angel investors. And I want to embarrass Rayn a little bit and read out some founder testimonies that I found. So one of them says, if it was one person outside the business that has made the biggest impact for us, it would be Rayn. That's the founder of Cast. If you're building a company, Rayn should be one of your first stops, founder of Eucalyptus. Rayn understands what it is required to put a story together in the most succinct way to attract external investments, founder of Liger. And for those of you who don't already know Rayn, he's made over 60 seed and angel investments in the likes of Propeller, Morse Micro, Eucalyptus, whose founders have praised Rayn for his fundraising strategy insights, which he will share with us today. Rayn, thank you for taking the time to help us all level up this morning, and I will now hand over to you for your presentation.
Thanks, Tip. Well, you cannot really trust those recommendations, right? Because I pay them to write it. Good morning. My name is Rayn. Thanks for having me, Tip. We're going to talk about the first round of funding today. We only have 15 minutes, so we'll talk through. I'll give you a little bit of background of who I am, 4 tips on fundraising, and 2 of the startup stories. Who's Rayn? So I manage our family investment into startups. So focus in the first 2 rounds, up to $1 million in the first round, up to $4 million in the second round, and then it's pretty much venture funds or bigger family office will take over looking after the company. So like Tip said, the 60 investment in 6 years, so about 10 a year. So far, we have 4 exits. Last month, I achieved portfolio break even, meaning that we have exited enough cash to cover the initial cost, which is good. But I invested in 5 companies after that, so we are not at break even anymore. There's a rumor that I'm the #1 angel investor. I'm not gonna confirm anything here. This is my t-shirt collection. I like to wear startup t-shirt. I'm wearing the OG Blackbird Sunrise one today. And people see me wearing startup t-shirt and they started to give me more t-shirt. So this is my t-shirt collection from late 2019. I think about 88 of them, pretty lucky number. So just to get the definition right, what's first round? This is a tweet from earlier. My definition of first round is anything before Series A, and Series A is the second round. Sometimes, some founders do 9 rounds before Series A. That's fine, but it will be really hard to do, the next one. All right, here comes the 4 tips. Know your peers. All right, so one of the known obvious thing is when you're fundraising, your competition is actually the other startups out there raising fund at the same time as you. So, when you're only working on your own business and you're not part of an accelerator, you don't actually have a lot of perspective on the benchmark and what is great, right? So you need to understand, who your competitions are. I don't know whether you have heard, you will become the average of the 3 people you hang out with the most. There's a saying. So now here's a hack for you, right? Like you find someone who has raised $1 million, someone who has $1 million in revenue, someone with $1 million in profit. You just keep hanging out with these 3 people, and very soon you have $1 million in your bank. So I did the same when I first got started. I don't actually know how to angel invest. So I look around. I went to all the events. I try to find people who know how to invest, who will take a meeting with me, who will give me some tips. And then eventually you become somebody, right? And the reason I picked these three, they're all money related. So, number one, they teach you how to fundraise. And then the second one, they teach you how to do sales, marketing, and growth. And number three is, eventually you want to be profitable or you want to raise more money for scale. So that's something about optimization. So when you become somebody, it's time to add one more zero and, find your peer group that has, achieved even more. And, you just keep adding zero. It's not really hard. All right. And the benchmark is, I think in the market, if you raise $1 million and you get to $500,000 in revenue, that's actually pretty good. Sometimes we see 1-to-1. So we'll talk a little bit more about this. Number two, you want to know your venture max, right? Like sometimes not every startup can reach venture scale. So it doesn't make sense for the venture funds to invest in those startups. So this is a typical year for professional investors. Lots of leads, lots of calls, lots of Zoom, but they only have the bandwidth to deep dive into 10 to 20, and very often they do less than 5 deals a year. So this is how I typically invest, and I think most of the fund follow the same strategy. So they invest, say, $1 here, when you start to see some traction. And then when you really see growth, we invest more, like 4 times, 5 times the initial amount. So that's the second round. So this is where I normally play first round and the second round. And imagine you have $60, you want to build a portfolio, over 4 years. So I'll do 10 investment a year for 3 years. That's $30, 30 companies. And then in year 2, some of the companies you invested in year 1, you start to see them emerging as the winner, and you invest $5. So this is 6 times 5 is $30. So 50-50 split. And this gives you a diversification, for risk management. So you don't have all your eggs in one basket. And when the winners emerges, you can concentrate your holding, right, by investing more, often at a higher valuation, but lower risk. So $1 first round, $5 second round, so $6 into one company. And people are obsessed with 10x return, because 10x pays back the whole portfolio. $60 portfolio, 10x, you pretty much pay back the whole fund. And I think the industry called it a dragon. So I'm pretty lucky. I hit a dragon, I think 2 dragons so far. And power law, right? Like the most of the return will come from the top 1 or 2 investment. This is why most of the investors in town, cannot stop talking about Canva, because Canva is a multi-time dragon that have made a lot of money for many angels and funds. Number 3, know your audience. If you use a cookie cutter pitch, right, it's often not efficient and effective. The investors comes in different shapes and sizes, and they are looking for different things. So I think this is a breakdown by firepower. We have the high net worth with $1 million liquid. Often, they also have a job, so they are pretty busy. They can't really take too many meetings. And then, the next level, we have the ultra high net worth, 30 million or above in terms of asset. And then you have proper family office, with staff that actually runs the investment for them, often over 100 million. And then, in Australia, we have, I don't even know how many funds we have now, right? When I got started in 2014, I think we have 9 venture funds. And now we probably have 50 to 60 funds, right? Like, it's crazy. And some of the funds just raised, like Blackbird just raised, was it 250 million? So, sorry?
I think it was double that.
So the core fund 250 and the follow-on fund 250, something like that. 500 million, sorry. Okay, so Blackbird just raised a 500 million fund. So that's a lot of money coming into startup. So let's imagine, this is a pretend family office. Like I said earlier, don't put all your eggs in one basket. So oftentimes they have allocation into different asset classes. In this case, 30% into listed shares, 30% into fixed income, and often this fixed income cover the lifestyle expenses. 30% into property, because we're in Australia, everybody is obsessed with property. And then it comes to this 10% alternative, hedge fund, private equity, venture capital, direct angel investment. So this is the 10 million allocation you are fighting for, for a 100 million family office. So how do you invest 10 million over 4 years if you're running a family office? Well, it's the same, right? You invest in 10 companies every year. You put aside $5 million to do it. And then when the good company emerges, you give them more money. So you're looking at around 100 to 200K check, and then follow on up to $1 million. And this is probably the check size of $100 million family office. So what is 10x? Quite important. If you return 10 times, if they invest $1 million in you and you 10x, the investment, you actually return the whole alternative asset allocation for this family. So this is quite meaningful. It means that, they can take more risks, they can reinvest the money, all the other companies that they invested can go to zero and they are still, in profit. And if you, 100 times the investment, you actually double their whole net worth. So this is super meaningful, right, to most people. So, we'll talk about storytelling, but you want to talk about, how do you 10x to 100x, right? That is the way to close the round. This is the Australian flavor. Sometimes you need to talk about the 1x safety net, meaning in the extreme worst case scenario, I will not lose the money, right? This is quite important, right? When I first started, I was given an allocation to do tech investing. The agreement was, if I lose the money, I'll go get a real job, right? So I was super conservative, I do a lot of diligence. And then I start to make money from my exits. And then my risk appetite just grew pretty significantly. So, depending on who you're speaking to, right? If people make money from tech investment and they are reinvesting the proceed, they don't really need to hear the 1x safety net, because that's just business, right? If we lose the money, we lose the money, but we only make the money from the 100x, right? If you can do 1000x, no, that's like, Canva level. Everybody will be talking about you. And also, right, what motivates them, right? 100 million family office, if they put everything into fixed deposit at 2% interest, they make 2 million a year, right? Imagine 2 million doing nothing, $2 million in your bank account every year, if you ignore the inflation. Then you really have to understand what motivates them. Are they after power and influences? Do they care about social, environmental impact? Greedy folks like me, I want more money, and I want the fame that comes with it. That's why I'm doing, a giant weekly at 8 a.m. in the morning. So how do you tell this story? Now we get a little bit more technical. These are the stuff you need to figure out, right? Get your story together. How much money do you want? How long will it last? This is important, right? What kind of progress will you make? Because you always need to make progress to tell version 2 of the story. So, so that you can raise the next and bigger round at higher valuation, or you get profitable and you are in control of your own fate, right? There's no right or wrong, but you want to stay alive. I don't know how you can stay alive without doing, without becoming profitable or make enough progress to raise the next round, because you can't keep raising a flat round after a flat round, and you dilute your investor, and you won't own any shares after 3-4 rounds. So when you're telling the story, this is the 3 things I want establish. Can you make money if we invest? Can you make more money faster? Right, faster is quite important. And then finally, how do I make money? And I typically can make money when a company gets to 100 to 200 valuation, because I get in pretty early at 5 million or below in the first round in terms of valuation. But venture fund comes in a little bit later, so they want to look at $1 billion outcome for their 50x. So understanding how that dynamic and the calculation and the formula works is quite important into crafting your story. So when you're pitching, this is what's going in my mind. Do I trust you? Do I believe in what you tell me? Can I trust your reporting after I invest? Do I need to double check everything? Can you sell? Right? Can you sell the dream to the investors? Can you sell the product to the customer? Can you sell this opportunity to superstars, employees? It's all about sales, and you need someone to build the product, but you also need someone to tell other people about the product, right? When I first started, I paid too much attention to, what if I lose the money, because of the safety net reason. But now, I care more about, what if this works? If this works, how big can this be, right? So that that change of risk appetite, it's pretty significant in my case. This is December 16. Blackbird returned 100 million to their investor, and they sold 40% of the fund. It was a 20-something million fund. So this is a 10x, almost 10x return. And now I'm pretty happy to be on the receiving end of this distribution. It's a very meaningful distribution, because before this, I was actually running out of money. So everyone that pitches me, no, I don't like this, right? Like, this business won't go anywhere. It's not that, right? I ran out of money until I got my payday from Blackbird, and then we have a few after that. So like, I'm pretty bad at managing my cash flow. So like I said, I made like 5 investments in the last month or 2. This is Jason Kalakanis, a very famous angel investor in Uber. This is game changing, right? Like, he invested 25,000 into Uber's first round, and when they IPO, it's worth almost 5,000 times. So really significant. A quick 2x is good for me, because I can recycle the money. A quick 2x is bad for the venture fund, because they have to return the capital to their investors, and that hurts their IRR, which means the return number over time. They would generally want to look at minimum 10x, but if you want to be a really, really good fund like Blackbird Fund 1, you need a can bar in there to make 40 times or more. Now, ideally, you want a 5,000x like Jason, and that's why I'm doing this. You get your stable asset classes, and then you have this wild card that may return the whole family fund. And after you have a good story, right, you want to find people actually with the money. So good story, know your story, know your audience. You want to find people who are a believer, right? Who believe, what if this works? Who will support you along the journey and actually have the cash to invest. Otherwise, they'll find all sorts of excuses to not invest. I think we are running out of time. But then you can also pitch to the skeptic, just like a JDI training for you to, hone your story and make it better. I want to talk about 2 early stories. I always talk about this Propeller story, and they were in the AFR few weeks ago. We pitched to over 100 people in 2015. So that was my first time involved in a StartMate batch, and my first time leading around. So we closed the $1 million, and that was the first time a company doesn't have to move to San Francisco, and they could stay in Sydney. This deal landed, like put me on the map. But this is a story of personal growth, right? The 2 guys they don't know anything about landfill, they don't know anything about open cut mines, and they became an expert in that market. And they don't know how to raise money. They raised the first round, and then they know how to raise like 10, 20 million round now. They don't know how to do enterprise sales, and now they have 50 people doing sales in Denver. So every time you raise a new round, your company goes into a different stage. You have to grow into the new role, right? They have demonstrated this again and again and again. And then we have Fresh. This is another story, right? Like I met Fresh to Kaba. The guy that I want to talk about is Ben on the bottom right-hand side. He was running this company called Duopat that I don't think has any money in this. So I actually raised that with him, but he kept me posted. He kept me informed. And every time he's in Sydney, he asks me out for beers. And every time he meet me, he will give me a progress update. And then when I challenge him on the, monetization model, eventually he landed on, Fresh, right? Which is making pretty serious money now. This is a story of perseverance and accountability, right? He kept, touching base and kept me posted until he broke me. I'm like, okay, I'm a believer now, right? I want to invest in this company. And remember that benchmark, you raise $1 million and you get to $500,000 revenue. That's good. But, Ben actually did a 1 to 3 last year, right? So that is a pretty crazy progress. I have joined forces with Archangels. So if you're feeling that urge to pitch me and I don't respond, you should hit up Ben and Quentin. They'll be able to help you. That's it.
Awesome. We have 7 minutes for Quickfire QA, and I'm just going to start from the top. Tony Tan says, I'm looking for a family office investor, but I find it really hard to find them. Any tips on where to find them? So where do you hang out, Rayn?
Yeah, I'm trying to infiltrate that group as well. It's very hard to find when you're not one of them. And even I look like one of them, I'm not quite there yet. I'll report back in a few years' time.
All right. Brady asked, for the advisory and resource piece, how do you make sure that you're connecting founders to the right people, and how do you do that at scale?
Oh, we can't. Relationship doesn't scale. So we have to be picky, right? That's why we only do 10 deals a year and not 100 deals a year. The thing that we have built over the years is that, we work with most of the groups that are actively investing. So we kind of know what they're looking for, where are their sweet spot, what kind of businesses that they like. This will probably take the founders, a long time to figure out, and they probably do it once or twice. So it doesn't really make sense for them to, if you want to get a shareholder agreement done, don't go and get a law degree, right? Get a good lawyer. And when we are the good lawyer in that case, right? We are the directory to the people with money and the risk appetite to invest in startups.
Awesome. Stuart Snyder asks, SaaS companies like Canva made great returns. Are there still great SaaS companies to invest in, or what else do you think is the next big thing from you personally, Rayn?
I'm looking into alternative protein. And, I used to not invest in e-commerce businesses in Australia, and Koala Mattress kind of proved that you can make a lot of money. So I invested in eucalyptus and, D2C and everything around D2C, on the supply chain, logistic, distribution, and, warehouses. yeah, those are the stuff that, you know, I'm pretty interested in right now.
Awesome. Ken T asked, what is the criteria for you to invest? Like, does it have to have MVP? Does it have to be generating a revenue? What do you tend to look for?
Yeah, I have invested pre-revenue before, and you know, sometimes after one meeting. So it varies, right? If I don't have a lot of cash in the bank, and you know, I'll be quite picky. So it's not like a set in stone kind of. I'm quite flexible. But if I trust the founders, and I believe in the vision, you know, where, you know, I have invested pre-product even.
Interested in the pre-product, pre-revenue. What is it about the founders that help you build conviction when there's no evidence, or at least of that company? What do you look for beyond that?
So there are little things you can observe, right? How resourceful are they? You know, I like to introduce them to people who can potentially help them, or customers, you know, that they could potentially sell their product to. And then I get the feedback and see, you know, how they follow up, you know, with that intro. You can learn so much just from that exercise. But it takes time, you know, like I said, relationship doesn't scale, and you know, it takes time for you to do all those activities and observe and take notes.
Actually, on that point, what's been some of the best ways founders have kept you in the loop to show progress? So what is the right amount of communication? What's been an example of someone that does that really well to help you gain conviction over time?
The best way is, you know, you create a newsletter for the investors, like a 3-minute read. And every time you send it out, there is good, bad, ugly, and what progress you have made, like, so that it helps build comfort. And we're, all right, they say they're going to do this. They actually, you know, have achieved that. You know, over time, you kind of build that level of conviction and confidence and comfort. So, and that scale as well. You don't have to do 20 investor, you know, update, right? You do one, you send it out, and then people are informed.
That's awesome. We're at time, but I just want to quickly ask, how did you earn the tag, the 100% signal, and what's your t-shirt size?
Since my involvement in StartMate, I have angel invested in every single startup that have raised more than $10 million. So my hit rate is 100%, and that's why I'm 100% signal. And you just keep telling people that, right? And then suddenly it becomes your official name. My t-shirt is, I wear size M.
Awesome. How did the founders get in touch with you after this if they're very keen and dying to talk to you?
So if you look at the presentation, right, I'll email a copy of the tip. You can have it. Okay. There's a LinkedIn screenshot. There's a Twitter screenshot. I have a Medium blog as well, but I'm a low production blogger. Like, I only have 6 blog posts in the last 6 years. And there's also that email, the URL to Archangels. So you can hit up Ben and Quentin.
Awesome. Thank you so much, Rayn. That was awesome. Thank you for your time this morning. And next week, we have Audrey Cheng, who's the Chief Product Officer of Snapcom's, former VP of Product at Pushpay, and she'll be sharing her knowledge of how to build a UX-centric product strategy and lessons she's learned in refining UX research over the years. Thank you, everyone, and we'll see you next week. Thanks, Rayn.
See you guys.
Bye, guys.